Global share markets have been mixed once again over the past 24 hours, with US markets in some cases seeing mild increases, but in other cases they have seen mild falls. But the big news for the New Zealand economy is once again the tragic events out of Christchurch, with further earthquakes being struck on Monday afternoon. And the real question for global markets is what this will mean for the New Zealand economic outlook over the short to medium term. When I do look at some of what has been happening in markets overnight, I look at some of the big news channels, and this has certainly been a fairly big news item, as it does have implications for our economic outlook here at home. And immediately after the second earthquake, the Kiwi dollar did fall around 1 cent against the US dollar, from 82.20 down to 81.20. Since that point in time, we have strengthened somewhat, but we are much weaker than we were yesterday. And this all comes down to the negativity and the possibility that we may see some economic effects down the track. Well, the New Zealand economy has been relatively subdued over the past 6 to 12 months, and most of us have been predicting that we could get a pretty good boost to our economy from the Christchurch rebuilding effort. But of course, with further earthquakes, this does put the short to medium term in doubt, as some of these reconstruction efforts may not be able to get underway quite as quickly as we were previously thinking. So this does have some implications for the New Zealand economy, but it also could have some implications for interest rates here at home. The Reserve Bank may take the option just to wait and see how our economy pans out over the next few months. And most have been predicting that the Reserve Bank would move on the official cash rate around December or January. But this may be pushed out just slightly, and already international markets have pulled back on their expectations, and over the past 24 hours we've in fact seen interest rates drop in some cases. New Zealand sheep farmers have been enjoying good returns over the past 12 months, and there's two factors that have been really providing them with the major benefits. Of course, the first is sheep meat supplies have been pretty tight, and in turn prices have lifted remarkably over the past 12 months. And the outlook is also looking pretty good over the next 12 to 24 months, as I'm suspecting that supplies just won't be able to keep up with demand on some of our international markets. The other factor is wool prices, and who would have predicted that wool prices would be at levels now when we were looking at the market, say, 12 months ago. And the fact is that we are likely to see a real acid test come on the wool market later on this year, when the high prices that farmers have been enjoying are being passed on to the end processor and potentially even on to the end consumer. If we do see a pullback from the market, we could have some impact on prices, as we have seen in the cotton market over the past couple of months.